Welcome back to Be Rich, everybody.
Anand,
I'm sitting in Bangalore. Anand's in the studio for a change. We have switched positions. Usually, Anand will be the one traveling, and I'll be the one at home base. Fortunately for me, I'm traveling this time,
mm,
and Anand, unfortunately, is stuck in Chennai. So I
no,
thought,
I'm
since
not in.
everybody's, you're not in Chennai.
I'm in Chennai, but I
Mhm.
travel on work. You're on vacation.
Yeah, that's true. I'm on vacation.
Mm.
Anand doesn't take vacations. I don't know why. I do encourage him a lot to take vacations, but he seems to be very resistant to the fact of taking vacations.
So
Anyway,
far, I
we
have not taken
digress.
a.
We
Yeah.
digress. Let's get back to
Yes.
the topic at hand. All of you have been clamoring for us to talk about the bank collapses in the US. And
Mm,
last night, Credit Suisse having a rocky evening, which
mm,
was teeter tottering till the Swiss government stepped in, the Swiss Central Bank, and said, yes, we will bail you guys out. There was rumors
mm,
that another government was putting pressure on the Swiss government to bail the
mm,
Credit Suisse out, and the Saudis had backed out. Lots of kinds of news were all floating around. So I thought
mm.
we'd let Anand give his views on this and explain why it is important at the same time to help us differentiate the noise from the actual signals. What do you say, Anand?
The signals are very clear that the American banking system, especially the regional banks, not the
Hmm.
main money banks like JP Morgan or Citibank, is not in trouble. Or Bank of America, they are not in trouble. America has a lot of regional banks which do not come under the Federal Reserve, which come under the state regulator. These are listed banks. These banks are in serious trouble. Silicon Valley Bank was the 16th largest bank, so it got into serious trouble. The contagion effect sank another bank in New York, Signature Bank, and there are at least five, six other banks which were teetering, and its value of its stock was down 70%. Till the Federal Reserve said, we have a new plan where you can take your treasury and give it to us. And without any haircut, we will give you 100% loan for 1 year. So that meant that there is some liquidity that has been restored in these small regional banks. And it has said that all depositors, irrespective of whether the deposit is insured or uninsured, because if you have more than 2.5 lakh dollars in the bank account, then it's an uninsured deposit. Most
True.
of these small banks have grown on basis of a lot of these deposits being uninsured. So basically, what they did is this Silicon Valley Bank especially took their entire portfolio and put it in long duration bonds. That is bonds which mature 30 years down the line with a fixed rate of 1.6%.
True.
This looked like a yield hunting. When rates was zero, this was looking great. That is, I'm borrowing at very little money and I'm putting at 1.6%. The spread was neat. But when
Correct.
the Fed started to increase interest rates and moved from 0 to 5 in no time, it did not give time for banks like Silicon Valley Bank to liquidate their bond portfolio. Because
Yes.
as rates go up, the price of government bonds keep falling. So
Very true.
government bonds prices corrected heavily, and it
Very
wiped
true.
the cap in all these banks, including money center banks. The equity or the capital, the money that belongs to the shareholders is very less, and the banks are leveraged more than 100 times to make them more profitable. So a small movement in asset prices has wiped out the shareholder capital. So what the Federal Reserve has said, this is not a bailout. The shareholder will lose all his money. The bondholder will lose all his money. And the only money that is saved is going to be that of the
Depositors.
depositors. This has stemmed some fear, but this is a slow moving crisis. So once you have said that, banks will be the sigh of relief and it will be easier for you to withdraw money. So there will be not a fast paced run on banks, but a slow paced run on banks. Anybody who knows their money is safe also will worry, why should I lose access to it? Might as well take it and put it in a big bank. So small banks will bleed deposits, big banks will have inflow of deposits over a period of time. And I will not be surprised if more banks go down under. or go and take money from the Federal Reserve to stay afloat. As far as Credit Suisse Bank is concerned, it has been in serious trouble for years. In
Very true.
2006, it was valued at $60 a share. At yesterday, it was at $1 a share. Then Saudi said, "Thank you very much." And it went back to $2 when the the
This
central bank said that we will give you $50 billion plus so that you will have your liquidity. That is what saved the market. If Credit Suisse Bank had been allowed to fall yesterday, today you would have had a pandemonium in the markets. Luckily, the pandemonium has been avoided. But there is a slow exit coming from all stock markets and all risky asset classes.
correct. But what I wanted to ask you was how much of this is actually because of the easy money which has been floating around because of what happened in the US and across the globe in 2008, and how much of it is this poor management by these banks?
It is
Because the
100% poor
writing was on the
management.
wall. Yeah, writing was on the wall.
2008, 2008 was a different kettle of fish. The
Hmm.
banks did a wrong underwriting policy in giving housing loans.
Hmm.
In this case, what nobody expected inflation to rise so rapidly. In
Hmm.
fact, a hedge fund manager with whom both of us talk to daily, he was saying till last week that inflation is transitionary. So he would have done the same thing. So you
True.
decided, dependent on which camp you were, whether inflation was transitionary or inflation was permanent. It so happened that inflation became permanent, so the investments they made looked foolish. But if
Hmm.
inflation was transitionary, and as the hedge fund manager believed, and the rates had not gone up as much as they had gone up, then
Hmm.
that decision would have looked like a genius. The
Correct.
idea was they could not figure out that rates would go up so as fast as they could, as fast as they have gone up, and
Hmm.
that created the problem.
And
The mark,
even now,
yeah,
with what's happened, there's
mm,
not going to be change in the direction the Fed is heading, anyways, right? Because
people
inflation
have
has not.
inflation has not changed. In
Hmm.
fact, in unemployment numbers have not been good. In the
Hmm.
sense that even now there are no in service sector, low level service sector, we are
Hmm.
unable to find anybody to work. So
Hmm.
it's a combination of three things.
Hmm.
After pandemic, the elderly don't want to work.
Hmm.
500 million people have died in America,
Hmm.
and so therefore, and the lack of immigration.
Hmm.
Even the Democrats, who are normally
Hmm.
liberal in welcoming people, have
Hmm.
not taken the chance with Trump with new immigration policies. So you
Hmm.
don't have any immigration. More than 50 million people have died. The
Hmm.
elderly have left the working force.
Hmm.
Therefore, you feel compression at the lower levels, at the
Hmm.
hospitality and other service sectors.
Hmm.
And the tech sector is shedding people left and right.
Yeah, even
But
Facebook recently is. Yeah.
yeah, so if we have been working in Facebook at a senior level, you will
Hmm.
not end up as a dishwasher in a New York restaurant.
Hmm.
For that, you need a Mexican worker. So unless that happens, you are not going to solve the problem.
Okay.
So I think
Another question.
America is sustained, is in for
Hmm.
a period of sustained high interest rates. Engardu என்னோட feeling.
Okay. I have another
And
question to
all,
pivot to,
yeah,
which is a lot of these venture capitalists and who are investing in these Indian unicorns were
uh,
funding through this Silicon Valley Bank.
no,
Around
they
60
were,
or 50 odd of them sitting in India now have been, are they going to be squeezed, or what's going to happen to their payroll,
of
and what's
course,
going to
they will
happen?
be. See, these venture capitalists had their account in Silicon Valley Bank, and
Hmm.
Silicon Valley Bank itself has a venture capital arm.
Hmm.
So this has taken big bets in other. This venture capital arm has invested in other venture capitalists.
Hmm.
They in turn have invested in America. So
In
if
India.
in India, so if Silicon Valley Ventures pulls out
Hmm.
money, then we
Hmm.
will have a lot of pressures. You
Hmm.
already have a lot of funding pressures. You will have it
Hmm.
worse. Hmm.
So the roll-on effect of the Silicon Valley Bank has even seismic shift in India also happening.
It's already reached Indian shores. A lot of people have lost jobs.
Hmm. So, as you famously always keep saying, you only know
Hmm.
who's swimming naked when the water runs out. Has the water tide
Exact.
started going out, Anand? Do you think the tide is moving out?
Looks like that the tide is moving out, but I will
Hmm.
be more confident if another 1,000, 2,000 points falls from here.
Okay. Okay.
See,
Anyway,
the
this gives
market
you a
peaked at eight. Market peaked at 18,800. The
correct.
20% correction is 3,600. So
Hmm.
you have to correct 3,600, meaning 15.2 or 15 is where 16.2 or 3,000 means 15.2 or 15 is the
Hmm.
near market level to which market can fall.
But do you think there's a lot of buying opportunities now coming for bank like Indian banks like IndusInd Bank? Do you think it's corrected
Yes,
enough to see these Indian small
no,
banks?
no,
Are
no, no.
they
There'll
ripe
be
for picking?
some of them will become ripe for the picking in 1 or 2 months. But if you are
Okay.
buying small quantities, it does not matter. You can buy them now. But if you are
Hmm.
putting big quantities, you
Hmm.
better wait. You will get better chances,
Which are going to be coming around soon.
which will come around soon.
Okay. So this is gives you a. I hope everybody got a insight into what Anand thinks the effect of the bank collapse and the current market situation is across the globe and its impact in the Indian markets. I hope you guys enjoyed this conversation with Anand.
Thank you for watching, Birich. If you like this video, kindly like the video and subscribe to our channel. Turn on the bell notification so that you don't miss any video we put out. Once again, I thank you for your support for Birich.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.